Okay, good morning, everybody. And in the next half an hour or a little bit less, I'll be starting to analyze my go to watch list, gold, silver, oil, and the indexes US 500, 30, and 100 here on the right. Usually within those pairs, um, there is plenty going on in order to hunt out a best trade setup as per the Wall Street opening range, which gives us a high and a low of the opening range of Wall Street, 9:30 until 10 a.m. Today we will have major red news. We will likely therefore have volatility. We don't know which way it's going to go, but the outcome could jolt the markets or a particular asset into a particular trade setup for which we can roll the dice and position ourselves, manage our risk, and trade that particular setup and market. Not simply trying to catch a move, not trying to guess whether it's going up or down, trading rinse and repeat setups, breakouts of the Wall Street opening range, either to the upside or the downside, aligned with momentum and multi-time frame trends that can give us parabolic explosive moves, preferably out of coiled market conditions where the energy has been building up, preferably against a signal day, which might be an inside day yesterday, it might be an outside day yesterday, it might be a day zero signal day, and so on. All of this information I talk about, I educate, I trade, I show, I apply each and every day. I have put all of that into the Trend Predator channel. I've written a playbook of setups for which I'm hunting a handful of setups there, which, if you wish to align yourself with this style of multi-time frame trading, the US session, it's all there for you in the Trend Predator channel. If you've got any questions, please feel free to come forward and ask those and ask our analysts. And from time to time, I'll be holding trade recap webinars sporadically throughout the week in the afternoon. If there's enough demand, I'll be more than happy to jump into a live webinar with you. Just put your hand up and ask, and we will get something organized for that very same day. If not, I will propose something myself. In the meanwhile, let's look at the US dollar. First of all, just dragging the calendar over, and let's put this to American time, New York. Eastern time, where are you? That should be correct. So at 10 a.m. ISM services, 12 p.m. US crude oil stock change, Fed Williams speaking. What else do we got going on? We got a bunch of stuff coming out at the moment, And we had the ADP report. Okay, so a fair bit there, all leading into our we've got jobless claims as well that's come out just now. A fair bit leading into our 10 a.m. My major focus is going to be ISM services. We've got non-farm payrolls tomorrow as well. Don't forget, today can be quite tricky because of non-farm payrolls. It may be liquidation day. I haven't even looked at the markets yet. We'll have a look at that in a moment. I know that gold's been selling off, or it was at least in Asia. And first of all, I'll just do a quick peek. I'll have a quick peek at the US dollar just to give us a sort of benchmark for the day ahead. And I'll also invite you to use an indicator. I was up to 2 a.m. last night, my time, 4 a.m. New York, working on an indicator. So I'm pretty shattered today. I'm not sure how well I'm going to perform trading, but see how I get on with a cup of coffee. But either way, let's look at the US dollar first of all. So here on the right, we have this week, and excuse my sniffles, I've got a cold. This week, taking out last week's lows, but then coming back inside. So as you can see, we're moving up. So the grey candles are bullish, the black candles are bearish. We've wicked below last week's low, so that there is bullish. Okay, so we've broken yet last week's lows and then come back inside. So that's bullish energy in the market. We have broken above the volume profile value area low, which is the white dotted line, thick dotted line of last week. We've also broken above the value area low on the TPO profile, which is the VAL level here. We've run through the point of control of the TPO. We've run above the point of control of the volume profile. We have broken through the volume area high of the volume profile, and then we've been slightly resisted by the volume area high on the TPA profile. But all in all, on the week, that's bearish. Bullish. While we're above the points of control, at least. So I'll just give a support level there. Okay, and we'll get rid of this arrow that's pointing bullish. All right, so we're bullish above that level. Whatever it is on your broker, I'm using the ICE index as my guide. So that gives me a bullish context in the US dollar. However, on the day itself, we're inside, looking over here now on the left, we're inside of yesterday's range. There's the high and the low. And yesterday broke out of the previous day's high, pulled back inside, and that's bearish. So we have, as ever, heading into non-farm payrolls, a mixed bias on the US dollar. So a little bit difficult to draw any conclusion unless we get below what we've tested already, that point of control, which, by the way, is the previous day's closing price as well. I'm not going to be able to draw much in the way of a bias from this chart. If we get below this level, 98.09, some might want to say, well, somewhat neutral above at 98, bearish below 98. But I'm giving it bearish below 98.10. At 9 a.m. New York, we will have a new session that's closed, which will be London. So I'm boxing that off. Okay. And then we can start eyeing whether or not this market is putting in a high for London and then breaking below for New York, which would be bearish. So where are we at the moment? Let's have a look at the price. The price is it's up here somewhere, isn't it? It's trading up round here. 98.30. But don't forget, it's trading up into a peak formation, the highs of the week. And this can all be resistance. We've got the New York highs that it's testing from yesterday. We've got the London, is that the London opening price? Yeah. The FTSE opening price as well. So this could be a resistance area. Having said that, we're breaking above the value area high from yesterday, which is that grey dotted line. So that we can put that in there as well as another reference point. Marking this as resistance. Okay, so at the moment, there's a bit of volatility. We've got data that's come out. Now, that's not to say that this means that the dollar has to go up. What have I done with that calendar? So, I mean, how to draw any conclusions from mixed data like this? And we've still got the services coming up. So, there's absolutely no point whatsoever determining whether the dollar is going to be bullish or bearish based on this, not knowing how it's going to react to the services. Even if the services come out positive for the US economy, doesn't necessarily mean that the dollar has to rally. Depends how the market is positioned into the data and what participants are going to do with their positions because of the data. They might take profits, they might add, they might reinvest, new money might come in. We just never know. So we just wait for the data to come out, let the market do what it wants to do. And if it moves a particular market, be it gold, be it silver, be it an indices, be it the euro, into a position on the chart that is aligned with a setup, then that's great. And then we can trade the setup. But we're not trading the data. We're using the volatility created from the data to potentially set up the market so that we can take advantage of a rinse and repeat trade setup. Okay. So the dollar at the moment is trying to move higher into resistance, into the highs of the week. We've got our bases. Our base cases, we're bullish, well, somewhat neutral to bullish above yesterday's closing price, bearish below. If we're bearish below, then we'll be uber bearish if we can break yesterday's low. And therefore, that gives us a bullish context in gold, silver, oil, in the indices. otherwise was somewhat neutral. Okay, so we're now going to wait for the data to come out at 10 a.m. and I'm going to start getting into looking at gold, silver, oil, and the indexes. And what I'll be doing, first of all, is looking to see whether there are any um, signal days. Now, what do I mean by that? Let's look at gold and let's just have a quick glance. What I use is the Trend Predator Pro to see if we have any signal days. And a signal day is a day where the market's either consolidated or it's expanded in terms of the price range. A consolidated might be an inside day, whether there's a first red day, so a market that's been moving up and then suddenly closes red, or vice versa green, whether the market's overextended, i.e. 3L on the daily and the 8 hour. And just glancing at gold, there was nothing there I could see on the Trend Predator Pro. Over on silver, nothing jumping out at me particularly. And I'll get into this in a moment, so I'm not going to make this video much longer. Right, so oil. Oil gives us a first red day. Okay, so look at what happened after the first red day. So what is the first red day? As I said, it's a sudden bearish day after a series of bullish days. So we had bullish days counting back Tuesday and Monday. Those 2 days were bullish. Then we had this bearish day on Wednesday, and lo and behold, Thursday. So if you come in Asia or London and you see that we had a first red day, because that's what we would have had in those sessions on the Trend Predator because of that first red day, bullish, bullish, red day, bullish close, bearish close. Lo and behold, you were able to sell that market because you had a first red day signal day and you assume that we continue selling off in line with that first red day close. And there was the market, there was the trade. If you're trading Asia, and my strategy would be from 8, this is New York time, 8 p.m. to 8:15 p.m. you have an opening range. I use a 15-minute opening range in Asia because typically Asia is a tighter market condition. And therefore, when we break out of that opening range and we're below the closing price, we're below the low of yesterday, we have a market that's selling off on the sessions. Okay, we can align ourselves with that flow and be relatively confident, or as confident as you can be when it comes to entering a trade, that it's going to go in the direction of the trend. And therefore, depending on what you want to target or what levels, perhaps you're targeting last week's lows. Therefore, if you were trading in Asia, then great. By the time the FTSE opened, you had a opportunity there, depending on where you put your stop loss, above the closing price. If you want to be more aggressive, you had an opportunity to make a very good return on your money using a signal day. Now, in that regard, this is why I spent many hours trying to put together for you all and for myself an indicator that will help you easily identify signal days. So let's go over to that indicator now. Here it is. The Stacey Burke Signal Day Light version. And I will do a separate video on this for you all. But this is a free indicator that you can put onto your charts. So when you come in to trade, so as you can see, today is Thursday, yesterday was Wednesday, and what did we get yesterday? An inside day. and I've drawn an entire strategy for you all around inside days, and we will be applying that strategy today to the US 500. We have a day 0 day on the US 100, and what do we get on the US 30? And we got an inside day on the US 30. Excuse me for my sniffles there. So this can be a useful indicator that you can just put onto your chart, and you can see straight away if you've got a signal day. You can look back at previous signal days. So for instance here, we know that on Monday it was an inside day. We know that there's going to be stops above that inside day. So perhaps today is all about coming up for those stops. Markets do one of three things out of an inside day. They either it breaks out, pulls back inside, and potentially goes to the other side. Target stops below. And that's exactly what it did. Sorry. No, I'm not going to say that's exactly what it did the other day. That's one of the versions of the inside day outcomes. An alternative version is that it breaks out like it did over here, breaks out of the lows of the signal, or the high or low, in this case the low. And if it doesn't go back inside, depending on how the price action behaves when it breaks out, and it broke out very strongly here, then we can align ourselves with the assumption that it will keep going below or keep breaking out, stay outside of the inside day. It's a coiled market, built up energy, so we align ourselves with that breakdown. And in this case, if we were to do the same as we did over here today, we know that there are stops that we can target from back to Monday, the high of the week. So far, it's looking as though the price action is looking as though we're going to stay on the outside of this inside day. No guarantees, of course. That's why we wait for 10 a.m. for the data to come out and let the market show us what it wants to do. And if indeed it starts to break higher as vigorously as it did over here, just as an example, like it did over here, we can wait for an entry to take it long. We took it short there. We can look to take it long here, and we know what we're targeting. This indicator shows us that there is an inside day here, and there are likely to be stops above that inside day. So we can take our market. We're not trying to pick a bottom or a high. I mean, it could keep going. We never know, but at least we have a target. We can position ourselves in what is likely to be a continuation trend outside of the coil and look to take a segment out of the move. We're not trying to get the whole thing. We will get in if the price allows us to do so. If it just darts up, then that's hard to trade. What I'd like to see is a market that shows us that it's bottomed out by maybe giving us a W formation, and it starts to move up, pulls back, fake out low, nice big engulfing candle, and then we can get in on that momentum and target the highs and get a nice 2-for-1 in this case out of the market that's trying to push higher out of the inside day. Okay, so that's my approach. I hope that was helpful. I'll close it down now. I know it was a very long video, but I couldn't really explain that any quicker. So now I'm going to start getting into the market, looking at my assets and giving you all my analysis as we head into the major red news. ISM services, um, something that the Fed will look at with regards to its interest rate decision. Remember, we've got non-farm payrolls tomorrow. Um, Today could be a day of liquidation. Um, it's not often that you get colossal moves with new money coming into the market ahead of such an event tomorrow. Markets will potentially have already traded what they think is going to be the outcome and use tomorrow to get out of their trade. If they're right or wrong, you might get new money coming in on the back of the data, and then that's only going to set us up for next week for potential volatility and directional moves. I don't think I've left anything out, so I'll shut it down there. Thank you for watching, and see you in the Ask Our Analyst channel very shortly with all of my analysis on as many pairs as I can cover in the short time that I've got to do it all within.